Welcome to our November monthly market trends report. The biggest question that people are asking today is what's ahead for our 2022 housing market? What I'm going to share is the data that will show you exactly what's happening so you can make clear decisions in the upcoming year. Starting with mortgage rates. We're seeing projections for increasing rates. We've seen that over the past few weeks as rates have started to tick up a little bit over and above 3% on average. As mortgage rates rise, it'll cost more to purchase a home. Mortgage rates, prices, and wages are the three levers for affordability. The good news is rates are still at historic lows, and the rise will be in small increments, which will help buyers in making purchase somewhat affordable still in the market. Let's take a look at the mortgage rate data all the way back to 2018. What you see here is the rates were roughly just under 5% back in 2018, and they've dropped pretty significantly since then. We hit our all-time low at the very end of last year to early this year, and rates are starting to tick back up again, as I mentioned. So people want to know where they're headed. Rates are projected to rise roughly about 3.6% by this time next year. So if you're thinking of waiting a year or 2 years to buy a home, maybe even 3, but you're ready to buy now, buying before mortgage rates rise is critical to that affordability lens and making sure you can get more for the dollar. Now, what we also know is that mortgage rates aren't the only thing on the rise for the next year. Home prices are forecasted to appreciate as well. So here's the home price forecast for 2022, averaging out to about 5.1% appreciation next year. Home prices have appreciated at record-breaking levels of 18, 19, and almost 20% appreciation. So next year, the forecast is showing continued appreciation, but at a slower and more moderate rate. Prices are expected to continue to rise, but at a decelerated rate like we've been talking about. So definitely not projecting a decline in prices, but a slower rate of appreciation. So what that means is that it's going to get more expensive to purchase a home. But the reason they're projected to continue appreciating is because of our inventory shortage. Supply's low, demand's high. That's going to naturally make prices rise. And so what we see is that inventory situation won't be solved overnight. We'll still have an inventory challenge next year, but likely softening because builders are coming back into the market at a strong pace, building more homes, putting out more developments. We anticipate more sellers will also feel less pressure coming out of the pandemic and may be interested in selling their home, so going back into the market that they've held off for the last year or so. We've talked about record-breaking equity over the last year or so as well, and equity will continue to rise as home prices rise as well. So what I want to make sure that homeowners know is that if you're thinking about making that move in 2 or 3 years down the road, maybe even sometime in the next year, doing that before prices rise will help you leverage your equity, but also take advantage of the low interest rates as well, making that downsize or upsize, whatever it is you're looking for, just that much more affordable, and again, maximizing your appreciation. So here's the home sale forecast, and it looks like roughly 6.7 to 6.9 million home sales is how we're going to finish out this year, very strong. And then next year, potentially even exceeding what those levels are. The reason is why it's so powerful is because you look at last year, we sold 6.5 million homes in 2020, and that was record breaking. So we're projected to exceed what we did in 2020 again this year, and then again next year. So let's break down the numbers here in the Front Range. In Larimer County, there are currently 403 active listings on the market, 516 homes sold last month, which is actually down by 6% over last month. Average days on the market, 38. Average sales price, $520,000 with only 24 days inventory, down from 27 days last month. And a total of 458 new listings taken for the month of October. Weld County, there are currently 473 active listings, 550 homes sold last month, down by 15% over last month. Average days on market, 32. Average sales price, $470,658, only 24 days inventory. Same as last month, and a total of 303 new listings taken for the month of October. And in Boulder County, currently 248 active listings, 350 homes sold last month, down by 10% over last month, and days on market of 35. Average sales price, $788,000 in the county, with only 21 days inventory, down from 27 days last month. and a total of 303 new listings taken for the month of October. Whatever your real estate needs are, please rest assured we can help you. We grow our business on relationships with the consumer experience, most important. And I personally want to thank all of you for the recent referrals and the trust you put in our team. For all your real estate needs, go to kevinsellsco.com or 720-230-3030, and myself or a member of our team will be ready to assist you.